What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. Today we got an important episode. We're going to be covering multiple different aspects of the market. We don't just look at the indices. We look at various other asset classes such as commodities, the dollar, bonds, yields, and then we look at various stock market indicators. In today's video, we're going to be covering the weekly time frame and the daily time frame of the indices. Going to be touching in some indicators, some things that I've observed that are kind of important just to talk about, and the still potential that we can see this rally continue to rip higher. Before we get into that, I want to thank the sponsor of this video. You are going to notice that your viewing experience through this video has no mid-roll ads. You can thank PlantX for that. They are sponsoring this video. Really greatly appreciated for supporting my channel. I'm going to talk more about them at the end of this with links in the description. Let's go ahead and get into today's show. What's up? Welcome back. We're going to first start off with the indices. Everything is time-stamped in the description below, and then we're going to head over into the other various asset classes. So let's go ahead and start with the S&P 500. First off, we want to look at the weekly time frame, all right? And you're going to notice a bunch of blue boxes that I drew out. You're going to be wondering why. Okay, well, first off, the reason why I drew these red boxes, or blue boxes, sorry, are because of the price action that's kind of forming around the 13-week weekly EMA. And you can notice that we had big scare day that typically crosses below or right into the 13 EMA, and then it's followed through by just an absurd buy the dip week. A very bullish green candle. This is a bullish reversal type looking candlestick pattern, a 2-bar pattern that on a pullback like this, it's pretty bullish. Now we've seen that here, we saw this here, we saw that here. Okay, and all of these times, bam, bam, and bam, signaled higher highs to come. So what I want to call out just recently is we had that scary week, right? Oh no, but really it just came right into the 13-period weekly EMA, and on the daily time frame, it came to the 50-period EMA. And now we're starting to see the week what? We're starting to see it move higher. So it's playing the very similar script as we've seen previously. The strength is continuing to follow through for the week. It's still very early in the week, so we don't know exactly what's going to be taking place. We still need to be very careful as we trade the market, as we invest in individual names, or whatever the case is that you do. We'll be talking more on that in indicator section. On the daily time frame, we're still within this structurally bull channel technical pattern right here. We saw the bullish crossover on the daily time frame take place, and we're seeing just a relentless rip higher. Okay, we're coming into the top range of this channel. Our RSA is not currently overbought at the moment, but I wouldn't be surprised to see it potentially break out or potentially consolidate a little bit more, potentially before it goes and tries to scratch for that $4,000 level. And we're not that far from it, right? We closed at another all-time high, and the close was on a lot of volume, 2.1 billion in volume. We saw breadth in the market, which we'll cover here soon too as well. And the close, we closed at 38.92. So not that far off. We're just, we're in, a hand's distance, an arm's length away from reaching 4,000. Dow Jones, let's look at the weekly time frame. Now, I already stated this previously and also on my market update page on my website that it looks to me like that the descending wedge that I called out on the hourly time frame broke out, and it looks like it's going to try to reach for that target of 32,000. That's what we kind of marked as. I wanted to call out here, back when it reached back into the 13-week EMA, we saw that big scary red candle, but it was followed through by an immediate just boom, boom, boom buying, very bullish looking green candle. And you can see here we had follow through going up, and now today we're starting to see the beginning of some follow through up. That doesn't mean it's going to continue up, but it is showing continued strength, which is bullish. The EMA, the 13 EMA, is trending up as well. And notice here where the bearish crossover kind of took place right around this box where it got scared red day and then green followed through. Well, we're seeing a very similar thing take place. So, I wouldn't be surprised to see some more continued momentum to the upside. But like I said, it could change as the week progresses. This is a weekly time frame. On the daily time frame, we came back and we pulled back into the early November high right here, okay? And that acted as just a monster support, okay? Resistance, then became a monster support, not just here, but it was also here and here and throughout here as well. And then we had resistance all throughout here, and now we're starting to poke our head above that 31,250 level. So what does that tell you? Well, that tells me that more people are buying into this momentum. This could be the start of just another huge leg higher. We had the bullish crossover taking place on the price percent oscillator as well. We're not overbought on the RSI. This move has been pretty, this is a pretty extended move in a very short period of time. So maybe we might need to take a little break. Like, remember when we broke through this resistance, we actually trailed sideways before heading higher. It's very possible we see something similar, or we just go reach for that next, main key level, which I've been marking out as 32,000 before, really we need more data. We need more candles. We need more days to pass in order to find some new supports and new resistance. Let's look at the NASDAQ. NASDAQ also, I highlighted these blue boxes because very similar. We saw a very scary red week, right? And then it was followed through by a very, very powerful green week. And you could see that here into the 13 EMA, right below the 13 EMA, right here, bam, right here below the 13 EMA, right into the 13 EMA, right here into it, and then right here, it didn't actually quite reach it, but you can see a big red bearish looking candle, immediately bought right back up and created another all-time high. We still have support right below 310. We're looking at the NASDAQ, we're looking at the QQQs right now. I decided to use that here instead because I know other people trade the QQQs. Something that I want to call out here is the price percent oscillator has been relatively flat, just flatlined at around 6, while the price action has been kind of scorching higher and higher. Maybe this starts to spread apart and we start seeing something similar like this. This is just a relentless ramp up higher on the weekly time frame. Hasn't really taken much of a breath other than right here in this little pocket for a short period of time, and then bam, continued to move higher. Let's look at the daily time frame for the Qs. Bull channel, still trending within it. Some interesting price action, a little bit of a hanging man type candle right here. Last time we got a hanging man at the upper range of the channel, we actually had a pullback. So, maybe we might see one. However, we just did have that bullish crossover. So, maybe we consolidate or we ping pong back and forth some more, but still structurally speaking, it is within bullish context. If you look at just the moving averages, we have the 20 sloping up, the 50 sloping up, the 200 sloping up. It's going to take a lot to, be able to, change course here from bullish to bearish. Trend at least. Now, that doesn't mean that we can't see some short-term real big corrections, but it does take time to create market tops, just like it took a long time to really kind of create this just really strong bullish trend right here. So I personally, as I stated on the website, I wouldn't be shorting anything at this particular point in time unless if it's an intraday short and you're experienced doing that. But as of right now, we are in some pretty bullish context. So if you short the market or you buy puts or something, it's either to hedge something, or if you get super lucky, like that's what's paying you out. You'd be being paid out because you got lucky because it, something potentially like a rug pull happened at the right time for you. But as of right now, you just need to, be very careful, one with shorting, and two, even the long position, because the rug pull can happen. But two, if you're going long, you want to obviously buy into pullbacks, make sure your chart makes sense. You don't want to buy on overextensions. You want to make sure that it takes time to breathe or consolidate before really jumping into something. Let's look at the Russell 2000. Russell 2000, another all-time high. This thing is just insane. Negative divergence on the weekly time frame. Just after it broke through this 170 level, it has not looked back. It hasn't even breathed. It's just straight up in the air. RSI and MFI are both screaming overbought. This is, like I said, it continues to ramp up higher and higher, but the risk is going long right here. So this is the only one that I'd be looking more to hedge short on overextended moves. But even with that said, it would be it would be hedging with a put to protect my long positions, if that makes sense. Okay, so I'd be risking a little bit of dollars to cover and to make sure that, just in case there is a rug pull, it protects my long positions if something were to happen. Right now here on this, I still remain not bullish. It is a bullish chart, very bullish chart, but I don't remain. I'm not bullish on here to go long at these levels. I need a pullback. I need some consolidation. I needed to take a breath. This is absolutely just incredible stuff. Haven't seen this happen before. it's just you know, a sight it's just a sight to see. And then you look at the daily time frame for the IWM, and I mean, look at this, 41% above the 200 period moving average. You can see, obviously, very bullish context. Structurally speaking, not the greatest. It was been, you know, pressed up higher and higher through a bunch of gaps, overnight sessions. Even today, I didn't even mark in that gap, but it's there. We had the price percent oscillator did cross up. Once again, negative divergence there, negative divergence there. So this overextended move is due to take a breath, but it's anybody's guess. I personally would not touch this long. I wouldn't touch it long here. I wouldn't touch it long there and there, or even here. And even if it goes up to 300, I still wouldn't be touching it long if it doesn't consolidate, because the moment that I do go long in something that was just completely overextended, I'd be buying in at the wrong time. And plus, I'm here to protect my capital, right? That's what everyone should be here. If you're watching this show, you should know your number one focus is to protect and grow your capital, not to YOLO, not to risk all kinds of money to hopefully strike it rich. No, you want to be in this game for a very long period of time, and you want to grow your wealth over the course of time. I'm not here to, basically buy a lotto ticket to potentially hit big. Yes, it can. On a note on that is, yes, you can get lucky and you can make a lot of money doing something like that. However, that same behavior that you use to get the money will be the same behavior you use that wrecks your portfolio at some point in time. Ain't nobody just leave the markets after making $1 million and say, yeah, no, they want to say how smart they are, how educated they are. They want to justify because of the money that they make. And then all of a sudden they take that, they let it get to their head, and then they make a poor decision. And when they see that, quick hit, oh, down $10,000, it's okay. I can make it back. If I just put in $30,000, I can make that back. And then all of a sudden it's just this perpetual spiral to the downside. So you got to be careful. Whew, take a breath. Indicators. Here we go. VIX. VIX fell off a cliff, all right? Cliff. And even up here in this level, though, we said, hey, this might sound crazy, but this is where you'd want to find a long position. And guess what? That was at the exact time when the S&P 500 was pulling down in the 50-period moving average. I'm restating this so it just burns into your memory. All right, I'm restating it so you understand my thought process. I'm restating it so when you are just watching the markets and you're looking at charts and all of a sudden you see, oh, wow, it's actually pulling into an area of support here. Maybe I should start taking my profits. Or if it comes up to an area of resistance, maybe you think, okay, now is actually a good time to maybe start looking for long positions. Okay, you need to understand that and know that we are pulling into an area of support, because once gaps take place, that then becomes an area of support. We have not filled this gap for quite some time. We're still relatively high in the VIX, but we did break down through this, right? We did right here. That didn't last long, but then we broke through it again a little bit more. What's the word here? I don't know what I'm trying to say, but it looks more authoritative of a breakdown. That's not the word I'm looking for, but that I think still works. I'm still looking at this pink box, 20, 21, 19 to 21, maybe even fill this gap, which means that we still have room for the S&P 500 to go higher and individual stocks to go higher. But we are pulling into this area of support, which also says to me, maybe we should start trimming our positions, making sure we're taking profits off the table. All right? Does that make sense? It made sense up here. It should make sense down here. But the unfortunate thing is when it comes up here, the mind will tell you, no, it's not the greatest time. I think actually, nope, everything's falling apart right now. No, I'm not going to go long. And then down here, you're going to be saying, well, no, I think it still has time to go higher. The market can go higher. My stocks can go higher. I can make a lot more money, and you might, that's definitely a possibility. But you need to understand, what you're kind of trying to convince yourself is not actually what always takes place. You need to just look at the data, see what it tells you, and then go from there. All right? So was it a good place to go long right here in December? I mean, I don't have the chart. Actually, let me just look at the chart now that I'm just bringing it up. Let's look at S&P 500, December, go long. I mean, it went up and went back down. It went up and went back down. So that was an area of consolidation in December, right? So that just goes to show you, was it the best time to go long? Maybe on very specific setups. But you can tell right here, your money would have just been trapped in the S&P 500 because it was just consolidating and going back and forth. And it did so for, basically that month. Let's hop into the lumber and gold ratio, lumber to gold ratio, I should say. This is part of Michael Guyad's, one of his white papers, award-winning white papers, one of his strategies that he uses. And really quick, we did an interview. You can watch that interview if you want. Rate of change, 13 weeks. We're looking at the lumber to gold. When this goes down, that means gold. is performing better than lumber. When it goes up, it means lumber is performing better than gold. And really what it does here on the rate of change is when we get below 0 on the 13-week rate of change, that means we go into a risk-off environment. Risk-off, what does that mean? Risk-off means you can go into things such as bonds, right? Something that provides less risk than the equity market, or the XLU, utilities, right? Those are typically lower risk. And then, or cash, there's various other things that you can do, but typically what you look for is lower beta equities and or just investments that aren't quite as volatile. So what's taking place right now? Well, we saw this relentless ramp up higher. Now we're starting to see a little bit of a downtick coming in. We're still pretty far above 0, so we got some time to go, right? And not it doesn't mean that when it crosses below, it's always going to, the world's going to collapse. But this has found some very important times in history where it marked some very, important stock market crashes. And you can see right here in July of 2018, it was risk off. You would have missed that entire move to the downside. Right here, it crossed over before this market crash took place in February. We all know about that. Right here was the more recent time it crossed under. And you can see we had some consolidation to a little bit of a down pull, but then immediately, bam, ramped up and we went back to risk on. So very important indicator to watch. I'll be continuing to bring this up. Just know that, when it crosses below 0, it's the next week is when that signals quote unquote risk off. And it means that it doesn't mean the crash is going to take place. It means what he says is the conditions for a crash can very well happen. Here is the NIMO. This is the breadth indicator of the market. Hey, what do you know? We saw some breadth come in. That is refreshing. 47.84, not quite a huge overextended move, but we've seen it reach up to these levels before and we see little tiny pullbacks. So maybe that, maybe it might start moving down, or maybe we get some big burst of energy. I mean, what's interesting to me is we're reaching just these scorching new highs. The breadth isn't that crazy to meet, to meet the need of this huge move. And we're doing so on a negative divergence still. We saw that here in February. We're seeing that right here. I just haven't redrawn it out. It did break above that. And that means that we still have room to potentially head higher or even get a big burst of energy to continue. That would be, to me, on not a pullback like this, if we see a big burst of energy like this, see how on a pullback we had a burst of energy and it shot us up? We pull back, burst of energy, bam, shot up, burst of breath, burst of energy, whatever. If we are at an all-time high and we start seeing a burst of energy breath, that to me would be like, okay, this is definitely a blow off top. That would be pretty freaky to see just this massive breath come into the market as it's already screeching at all-time highs. But we're not there, so we'll talk about it if we get there. The null, the new high, new low index for the NASDAQ, negative divergence, ba-boom, and negative divergence, ba-boom. Obviously, we're making new time highs, doing so with less of a reading. We did the same thing here in February, so we're keeping a close eye on it. Okay, nothing's happened yet except for new highs. And then we have the BP-SPX. When we reach down to this bottom level, notice how when this reached down to the oversold reading, it was doing so right at the same time that the S&P 500 ran into the 50-period moving average, at the same time that the VIX was reaching that area of resistance, and then all of a sudden we started posting more stock setups. When you match things and you look at everything as a big vision, the macro vision, the whole entirety, okay, when you look at many different indicators and many different, patterns and price action and volume, you got to look for ideals to fit in your favor. So all these things were lining up where it just made sense. Okay, now is the time to look for positions. And when we get to overextended or oversold readings, which we're still not there in many cases, when we have more ideals in our favor for that, when the lumber to gold flips to risk off, when these are overbought, when our VIX is starting to, fill in a gap, then we'd start saying, okay, this doesn't look like the place where you want to go long at, right? So I hope that kind of just helps really, get into my head and how I think. That doesn't mean that I'm thinking the right way. I'm just telling you how I think, and I've been somewhat successful doing that, right? So let's look at commodities. We're going to look at the weekly time frame for commodities. Bull flag here for gold, still at the 50-week trading, moving average right there, and we're still kind of trending lower lows, lower highs. Hey, maybe we might break out here. Maybe we don't. I don't know. We got to get above that 38.2, that 1842 level in order to potentially see a little bit of a move higher and try to retest this high, which was right around 1970-ish, right around there. Silver, this right here can just be a period of consolidation. We came up, back tested, down to this area of support, and then we came in and hit that resistance, and now we might be kind of just taking a little breather here. Maybe we kind of trend sideways like this and then break out of 30. If it breaks above 30, that could be a very decisive breakout. The decisiveness could mean that we head a lot higher and a lot quicker, could probably reach $40 very quickly. Why? Well, first off, we're in bullish context. Two, this is resistance, and once resistance is broken, it then could become a level of support. Another thing that I want to call is the price percent oscillator has flipped here to bullish crossover, so we might continue to see this move if this trend here holds up in that level. Another thing that I want to call is the CRB index. CRB index continues to rip higher and higher, but hey, yeah, no, we're struggling to get inflation, but yet prices of everything are just getting more and more increased. Right? So the CRB index is running up into this 190 area of resistance. Clearly it was in this channel for quite some time before it broke down. We're back in that channel and we are moving very fast to the top end. So maybe we might take a break and start bouncing back and forth a little bit. Or maybe that's just going to say, nope, I'm going to continue screaming higher. And we are overbought here on the weekly time frame. Price percent oscillator is just really bullish momentum, just heading straight up there. So looking good overall. And then we got the WTIC. I posted a while ago a monthly chart of this. This is the weekly chart of this. And ever since we got through 50, we consolidated a little bit, had a big week last week. And now we're seeing continued strength, continued momentum. So some of the stocks that I picked were energy stocks. There's a reason for that because some energy stocks really benefit from higher oil. And what we're seeing here is just a really strong start so far to this week in oil. Let's talk about the dollar. The dollar is a widely watched asset right now. And the reason why is because we've been breaking out of this falling wedge, which is bullish. However, the market hasn't been responding. And what most people have been saying, even myself included, is when we start breaking out of that falling wedge, we can see pressure on the markets. However, another note that I want to make is the reason why I haven't seen the markets, or why we haven't, seen the markets react poorly yet, is because I think that it's simply because we haven't seen that much strength in the dollar yet. And I think the strength that it would need to see would be above the 92 handle because that was that really strong area of support. And once support is broken, it then becomes a level of resistance. So the market really hasn't responded poorly to the dollar recently trending up in 2021. Okay, from a low of around 89.5 to where we're at right now, 91. But we almost reached up to that 92, and we still very well may. The short-term trend is up. The short term meaning the 20 period moving average just crossed above the 50 period. But understand that the dollar is swimming in just up a river right now, okay? The 20 period sloping down, the 50 period sloping down. Notice the spread between the two. And then you have the short-term trend obviously trending up. This, to me, is very bearish. However, that doesn't mean that the trend can eventually change, but it takes very solid bullish trades in order to change the trend, all right? So I think that until we get above 92, the dollar continues to head lower. I think we need a decisive break above 92, not some sort of fake break, but I think that if we can get above there, then we'd start seeing the market react a little bit differently than how it has been, this relentless move higher. Let's talk about bonds and yields. Bonds and yields continue to move higher today, a little bit of a downtick, but I did call out on Twitter that the spread on the 30-5 has reached at 1.5, a little bit down today, but it was 1.5, and the last time it was there was in October of 2015, and I made the note that that was also when the Fed started to lift rates. That doesn't mean that the Fed's going to start lifting rates, and I think people they assume that's what I meant. That's not what I mean. I didn't say it, so don't make assumptions. I'm just making an observation is what that is. I don't think that the Fed can lift rates given the current debt loads, and on top of that, they've already stated that they're going to keep rates, till 2023 or 2024, whatever it was. They're not even thinking about raising rates is what they said. But you gotta ask yourself, like, I'm not smart enough to know this, but what happens if the 10-year keeps rising, the 30-year keeps rising, right? We're putting in higher lows. It keeps on rising and rising and rising, and it's rising fairly quick at times. So what's that good for? Well, financials, banks do good because they borrow short-term, they lend long-term, so now their margin increases. It's still relatively low, though, but it is increasing right here, so that's good. But what kind of pressure does that put on the consumer? Right? So first off, you're telling me that if the consumer saves money in a bank, they get nothing for it, but yet everything around them is getting more and more expensive, like homes and autos and anything that's a big ticket item gets more and more inflated, more and more expensive. Meanwhile, their dollars are becoming less and less valuable. as time continues. To me, this is just a recipe for disaster if this trend continues. If the curve continues to steepen, we've already seen what happens in recessions after yield curve inversions. And here's just a point to it. Here's a yield curve inversion, yield curve inversion, yield curve inversion, and then all of a sudden you have a steepening curve like so. And you can see as we get a very steepening curve coming out of an inversion, we see the market roll itself over. And the same thing here, steepening, falling over. This little inversion, this little tiny thing, steepening up. This was the pandemic crash here, which I don't actually think was the, I just don't believe that was actually because of the yield curve inversion. I think that we still haven't seen that yet, but once again, that's just an opinion. That doesn't mean it's truth or fact. And now the market is continuing to rise and rip higher and higher. And mind you that this time is different, right? We have more stimulus than ever. So who knows what's going to happen, but things that move vertically straight up in the air, they never end well. All right, it doesn't end well. It never has, never will, for anybody, for that matter. All right, it just things that go completely vertical without consolidating, taking a breath, having healthy pullbacks. It just doesn't end well, and it could evaporate wealth very quickly, just as fast as it gives wealth to these various companies when their market cap goes from 1 billion to 100 billion. After a nice little nap on the couch. Let's look at the TLH. TLH still trending down, getting pretty freaking hammered, to be quite honest. Lower lows, lower highs. I redrew out the channel because we have some support there. Maybe this is where we start seeing a little bit of a move up, but as it shows right now, we're just continually just getting hammered and clobbered. Positive divergence on the RSI, so that might be good here for short term. But we'd have to get back above 156 on the TLH. That's the 10 to 20 year, and then that would potentially put in that another little breath of air to go touch the top portion of this channel. But from here, high, lower high right here. So is it going to continue to dip, or are we going to try to go take out that high to make a short term higher high? I don't know. It's too hard to say. So let's wrap it up. We're going to talk about the conclusion, then I'm going to get into the sponsor of today's episode, PlantX, which I'm very thankful of, and you should be too. I didn't have to run any mid-roll ads, and I'm pretty excited about to talk to them, but let's go back into the conclusion portion. Where's my head at? First off, where's my head at is I am still looking for long setups, periods of consolidation, potential breakouts, using my various scans that I always share, but I'm being very, very quick to take profits. Okay, because some of these moves happen like in a snap of the finger where you get all of a sudden 8%. It's like, if you don't take profits at an 8% move, I don't know what you're thinking. Like, why? Why not? Because it's going to go to 20%, 30%, 100%. We're so distorted in this market reality where, it's funny because I posted, what was it? NESR was one of the trades and it was like moved 2%. I'm like, this is I used to be excited about a 2% move. Now, if it's not a 10%, 14% move in a single day, it's like snooze fest, right? Wrong. So if you want to live long within the market, aspect, if you want to build and grow wealth, you need to be very diligent at taking profits when they are given to you. And then you need to also be sure to, be very careful with how you size your positions in individual stocks. Most of my stocks that I shared today on Twitter, I'm in 15 positions, and I'm net positive in all of them except for 2. I'm down a little bit on as far as the number goes, but they did move up higher, and I did peel profits at a higher level. So I am positive in those specific stocks, or I took profits in those specific stocks. And what I can tell you is that my position size is like 1 to 2 to maybe 4% at the highest on each of those positions. So it's not like 50% of my portfolio is in one single stock and then I wake up on a huge gap down and I get completely destroyed. I play it very carefully, and I need you guys to understand that's not me telling you what to do or recommending what you do, but it is something that I do because I'm in this game for the long run, and I want everybody else to be a part of it too in the long run. I want to go ahead and take a moment to talk about today's sponsor, PlantX. Who's PlantX? Well, PlantX is the digital face of the plant-based community, truly representing a one-stop shop for everything plant-based. Before I get into what PlantX actually does and what it looks like, this is just a very interesting piece that just came out January 11, 2021. Some exciting news. They just announced its application to be listed on the NASDAQ. So it's not for certain that they will be listed on the NASDAQ. However, If they do get listed on the NASDAQ, that's obviously going to position the company to accelerate its business strategy. They're currently listed on the Canadian Stock Exchange under ticker symbol VEGA. They're on the Frankfurt, which is WNT1, and then also the OTC pink sheet market, which is under the ticker symbol PLTXF. Now, me personally, I was unaware of what PlantX was before I started kind of digging into what they did and looking actually kind of at their website. First, they have just a beautiful looking website, and they offer all kinds of, like I said, products that has to do with plant-based. And not only is it just certain departments and foods and various things that you can buy, it's also entire plant-based community where you can look up recipes, you can get meal delivery, it's almost endless. You know what it reminds me of? It reminds me of Chewy. Chewy is like that one-stop shop for like all your pets' needs. Well, this is like that one-stop shop for all plant-based needs. And the plant-based community has been growing very, very rapidly. We've seen things like McDonald's pick up a meatless patty, and we've seen Beyond Meat really take off too as well. This company is definitely gaining some traction. They've been seen in Forbes, CNET. What's very interesting here that I'd like to point out too is they're starting to sell, or been selling, plants. And you might be thinking, well, that's kind of off topic. Well, actually, according to the National Garden Association, home plant sales in the US increased by 50% to $1.7 billion over the last 7 years. So it's a growing industry, and PlantX has really been on top of it. Its founder, Sean Dollinger, realized that there was a commercial need for this, and since they've really been on top of it. So, it's just a very interesting niche market. Like I said, that they have recipes, but there's also something that I found very interesting that they are doing that has actually been becoming more popular as of recent. And that is the restaurant partnerships. Now, there's all kinds of stuff going on that they're doing to build and grow, but what I really found interesting here was the restaurant partnerships. So I don't know if you've heard of Mr. Beast on YouTube, but recently he started his own cloud-based restaurant. And basically what this is entailing is he created his Beast Burger line. And the Beast Burger line, then he creates branding for it and works and partners with various other restaurants, across the United States, potentially even across the world. I don't know too much about what he specifically does, but he sends them the merchandising and then gives the recipes to the restaurant owners that have the capacity to take on more business. And then he makes royalties for whenever they sell his brand of products. So it's a cloud-based restaurant. You can see here, they're doing something very similar. So they have restaurant partnerships, and it says, now is the chance for restaurants to grow their client base by adding our plant-based recipes to their menus. So imagine being able to buy PlantX meals, and they have, plenty of meals from various restaurants that also provide various other aspects and other things on their menu. So it just gives restaurants an ability to increase their revenue. It drives traffic to their business. It brings in, more money to PlantX, and it brings more money to the business. It's a win-win all the way around for doing so. Now, PlantX is in the still early stages of massive potential growth, especially within this plant-based industry. I mentioned that this looks really similar to Chewy, and for those that don't know, Chewy was founded in 2011. A year later, the company established a total yearly revenue of $26 million, despite losing money in the first half of the year. And from 2014 to 2015, their sales grew from $205 million to $423 million. PlantX plans on adding 100,000 products by 2021. And they're going to do so by making strategic acquisitions, utilizing the state-of-the-art supply chain logistics, implementing expertise in SEO, which, by the way, they're already doing extremely well in. You can search various different terms and they pop up right at the very top of Google, but also creating mega store location and vegan hubs. So it's overall just a very interesting company, very interesting niche. And, they have a solid team of people behind the build of this company. Here is the founder, Sean Dollinger. We have the CEO, Julia Frank, the CMO, Alex Hoffman, and then we have the CFO/president, Lorne Rapkin. I believe I'm pronouncing that correctly. And then here is the board of directors. They have an advisory team as well, a solid group of individuals really working hard to make this company the forefront of the plant-based community. As stated on the earlier slide, their mission is to be the most trusted and convenient destination for those living a plant-based lifestyle. So we always strive to deliver the best products with the best service. Just recently, PlantX acquired Bloombox Club UK, which now allows them to expand into Europe. On the horizon in 2021, this obviously has passed, so new meals and program. This was fall of 2020. This is what I'm kind of interested in, is the PlantX fruit-infused tequila. That should be interesting to see what they can do with that. And then also the spring of 2021, international distribution into Europe. You can see that with the purchase of Bloombox UK, which we just went over. Very exciting times for this company. The trend isn't really limited to just North America, despite how much they are building out into North America, such as that new digitized flagship shop with PlantX branded goods. This is in San Diego, Plush, Squamish. This is very interesting. So with cutting edge in-store tech solutions, they're going to bring the first US PlantX flagship in San Diego and the first Canadian PlantX flagship in Squamish, BC. So unlike regular brick and mortar, you're not going to have traditional shopping carts or aisles filled with products. Instead, you enter into the PlantX shop, scan QR codes, and the products you wish to purchase and pay for everything via smartphone or tablet. And now what's very interesting about this is that the team behind the San Diego location is going to be purchasing a minimum of $25 million, approximately $33 million of the company's products over 1 year term for distribution in the United States. The Squamish location is currently already known as the Locavore Bar and Grill, and it's going to be redesigned as the PlantX flagship and is already a favorite local spot to thousands of people. So this trend that's taking place, it's not limited to just North America. Healthier food choices are a global phenomenon. For instance, recent research by Berlin-based supermarket and food producer Vegans found that a number of vegans in Germany has doubled in just 4 years. The investment firm UBS, which you probably have heard of, expects that the global plant-based market to grow by 28% per year and reach an astonishing $85 billion by 2030. So very big growing industry, and we have a company here at the forefront of all of it. I'd be really excited to see them get listed and approved to trade on the NASDAQ. I personally do not have any money of my own personal invested. I am just bringing awareness to the company. They are sponsoring and compensating me for bringing awareness to this company, and I'm glad that they did, because it is actually a very cool it's just a really brilliant idea, and they're hitting it from just so many different perspectives. The last thing that I kind of want to close off and share here, because we compared them to Chewy, right? And Chewy is obviously just a monster brand, but they started off small. Okay, so it's all about finding opportunity, finding value, finding a need that the customer wants, and ultimately growing and expanding the business. And, it's just goes to show, just how powerful these businesses can take off. We had a record monthly gross revenue of $1 million for December 2020. Very exciting times for the PlantX team. If you want to learn more about PlantX, I'm going to have links in the description below to their website, to their deck that I went over some of the slides. They have a lot of information there, talks more about their company, where their future growth is going to be. It's very interesting stuff. So if you have the time, make sure to check it out. And till next time, I will see you back on the next Daily Stock Market Brief. Thank you.